All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital coming at you live here just a few minutes after 11 a.m. Central Standard Time on what is today? Friday, the 31st of March, 2023. So, man, oh man, coming up the end of the month, got lots of things going on. Hopefully, you guys can hear and see me all right. Let me see. Let me see if you guys can do that. I'll ask y'all real politely here in the chat. See if you guys can see me. I am not even sure. Okay, yeah, it looks like it's. I don't even know if it's coming up here. Good times. Do we see anybody? Hey, Spiral Architect, I see you, man. You can hear and see me all right? Okay, Martin, what's going on? Good. All right, guys. Listen, I just want to make sure again. I'm still, using this new stream software here and trying to get used to it. So, hey, Data, good to see you guys. Hey, listen, just real quick here. Those of you that are not on our server, whether on the free or the paid side, you don't know yet, but I just launched a pre-sale for our Pivot Points Master Course. So when this thing goes live on the 15th of, let's see, was this April coming up? It's going to be, it's going to be $499. But right now, if you jump in on the pre-sale, you can get it for $49. And I'm telling you what, if you want something that's going to just basically increase the way that you understand how price action works, how market structure looks, man, Pivot Point's a way to do it. But even better, I'm going to show you things on here that nobody teaches. I've talked about a few of them as we do here, pertaining to Elliott Wave. There's a lot more stuff that nobody ever teaches and how to use them by themselves and with other systems. And so you're going to get all you can. Like I said, guys, this is going to be the most in-depth course on pivot points that you'll find anywhere. So check it out. It's over there at, let me see here. Let me see. I'm popping in the chat there for you. As it says on the screen there, TexasWestCapital.com/pivot-points-MC. We also, in case you guys go over and you decide you want more, I'm going to release one master course each month for the next 12 months. And so I've got a list of them on there. You can get the entire bundle for like 93% off. So not only going to get those 12, but then I'm going to do a bonus master course that's going to be included in that on Hearst cycles. Fiboswani is going to do a bonus course as well on Fibonacci trading. And then, of course, you're also going to get a free month of Tier 3 service with Texas West Capital. That itself is $199. So anyway, jump over and check it out, guys. If you're interested in that sort of thing, if you want some help in how to understand market and structure and resistance and support, not just by itself, but with other systems that you may be using to give you more confidence in that system, I'm telling you guys, this is the way to do it. So jump over there, do it. It is a very limited time that we're going to be doing that, all right? So you can see it. That'll be the page there when you come up to it. And then you will be good to go. So let me check here. I'm going to have to check a different chart on here, right? Let me get my charts on here real quick, guys. Oh, let's see, where are we at here? Well, let's kind of do this. Let's do this here. Let's talk about some news and stuff going on first, and then we will talk about the rest of it there, all right? Let me see here. Deadly 123. I don't know why I'm having such trouble this morning, guys. He says, I actually love pivots and have listened to Chris speak of them for years now. I can just pop it on there. I don't know. Let me see. Can I pop it on there for you guys? I bet you I can. Can't I? Guys, man, just got to get used to all this, right? Let me see here. What do you say? Actually love pivots and have listened to Chris speak of them for years now, using Elliott Wave in conjunction with it. Fantastic stuff. Yeah, I'm telling you guys, man, the things you're going to learn applying pivots, more than what these few things I've talked about over the years, is just going to blow your mind when it comes to pivots or to Elliott Wave. It's going to give you a whole new appreciation for Elliott Wave. Let me see here. What's going on, Hank? Good to see you. Hank, man. Hank's been jumping up on that AI picture stuff, guys. You should check out his account, man. Follow him there on Twitter. Oh, Hank, I don't even know what your Twitter is, man. Go ahead and put it in there so people know. He's got some really great images. He's learning to prompt really well with Bing's AI engine. So yeah, he's got great stuff in there. Don't mind his personal opinions. You know, you can ignore them. Just enjoy the pictures. I'm kidding with you, Hank. Who else is here? Kimasabi, Andrew Bennett. What's going on, guys? Like I said, Martin's here as well. Spiral Architect, Data. Always good to see you guys. So here we go right now, guys. We have the CME group here, right? Let me see if I can make that a little bit better for you guys to see, maybe. A little bit better there, right? Let me kind of pull it over a little bit more. Let's see. That looks good. All right. And so as we can see here with the CME Fed Watch tool, remember, guys, this tells you what the market is actually betting, the money they're putting in to the odds of the next interest rate hike, right? And further down the road. So the next one coming up in May, gosh, we're already into March, May 3rd here, guys. We've got a 46.2%. They're putting in a 46.2% probability of the Fed staying flat at the next one, and a 53.8% probability of them raising it another 25 basis points. Of course, 50 basis points is nowhere on there. If you guys paid attention to the PCE this morning, I posted a Twitter update there. PCE came into, now remember PCE, personal consumer expenditure there, that is the Fed's preferred gauge. I know we talk about the CPI all the time, and that's the way it was for the longest time until about, I think it was about 2014, that the Fed changed to the PCE. And they like the PCE better for a whole bunch of reasons, but this is what the Fed's actually looking. You guys are looking at CPI going, oh, blah, 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 because the Fed's or the media is pushing it at you. But the PCE is actually what the Fed's looking at. And so we got, what did we get here? We had February was originally was 5.4%, right? So they've revised that down to 5.3%. Expectation was for 5.3% in March, and we got actual 5%. So surprise to the downside, showing that inflation is continuing to slow, right? Core PCE, which people go, okay, well, core is the more important thing, right? By the way, these are year-over-year numbers. So for February, core PCE was 4.7%. It was expected to be 4.7% again. Instead, it was 4.6% again, showing a slowdown in inflation, right? So I know there's a lot of stuff going on right now, guys, and I know there's a lot of people really freaking out. If you were around during 2008, 2009, when we had the great financial crisis, there was the same thing going on, right? And then you also had afterward, when the Fed kicked in his QE program, he's like, oh yeah, hyperinflation, blah, 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 right? Didn't happen. Of course, we spent a decade plus there barely being able to keep it out of deflation, right? I think it reached the 2% inflation point, like at one point in the last, in that prior, like the 2010s there, dipped down, below zero there a few times. So, I guess what I want to say, guys, is everybody's freaking out. Everybody's got all this, oh, it's definitely going to happen, all these things. But people have been saying this. They've been saying this about the death of the dollar since Bretton Woods, right? Every 5-10 years, we get this, oh, the dollar's definitely going down, right? And then they're saying, oh, this time's different. This time's different because, oh, look what's going on with the BRICS, right? BRICS. And oh, China and Russia and all this. But guys, come on, man. I mean, you have to look historically. Stop, even if it's coming, especially if it's coming from the media, guys, stop taking these things as this is what has to happen, right? Because we've seen in the past where, oh, China and Iran or China and India, it's always this, everybody's doing something. But if you look at it in the grand scheme of things, we've talked about this, previously, the Chinese yuan there is just like, it's so little of the world's anything is done in that comparatively to the dollar. I mean, like significantly little. So it would take a lot of work, which is going to take time to do it. You go, oh no, but hyperinflation is going to happen. It's going to happen tomorrow. It's going to happen next year. It's got to happen. No, it doesn't, guys. Right now, there's a dollar liquidity issue going on, especially as the Fed continues to tighten, right? That's why the Fed opened the swap lines, added more swap lines in with other central banks, right? So that they can get access to those dollars, right? Everybody says, "Oh, but the bank, the bailout of what they're calling a bailout of SVB and whatnot," right? No, these are it's just movement of assets on the Fed's balance sheet. Oh, look, the Fed's done $400 trillion a QE or whatever the hell, I don't know. No, it's not. These are loans out there that are going to get repaid at a higher rate of interest, of course. But they're secured by assets. It's not like the Fed's just like, oh, here's money going out there, enjoy. It's not what everybody seems to think it is, but this is what happens all the time, guys. So yeah, I'm not really concerned that the dollar is going to die off anytime soon or anything. There's nothing going on that says it's going to happen. There's just a bunch of people grabbing onto the fringe and going, "Oh my God, oh my God," and now that gets you guys all freaked out, and then you start believing the nonsense, and it just gets kind of crazy out there. Meanwhile, stock market continues to rally, right? Bitcoin continues to rally. Ethereum continues to rally, right? So, you've got people that are biting on this macro narrative to their loss. I mean, they're sitting here not trading up. Now you have some of your more prominent bears now saying, well, we're not going to talk about Capo or Prophet Blue because I maybe Prophet Blue really believes the nonsense he talks, but Capo, I think, is just looking farming engagement, guys. Okay, so they can, again, get a big following. You can sell to them, right? You can get advertisers to pay you a lot of money to put their name in front of their faces, right? It's just engagement farming. But these other big accounts, guys, that have been very bearish and continue to be bearish, even though we've had all these reasons why they shouldn't be, right? And then they keep moving the goalpost. Well, it's going to be bearish because it's going to flip here. Well, it's going to reverse here. And it goes through it. Well, it's going to reverse here. And they just keep moving those goalposts up, right? It's this failure to grab onto the idea that maybe, just maybe, you might actually be wrong. It might actually be bottomed out, right? And so you miss an entire chance at 100% rally. In Bitcoin alone, we're not going to talk about some of those alts, which have really kind of taken off, right? But just Bitcoin alone, 100% around that. I mean, it's ridiculous. So, I mean, I know it's hard. I recognize that, especially because you guys, you're not macroeconomists, right? You don't have these big backgrounds in this stuff. And when other people are talking about it, it sounds like there's just enough truth to make it sound like, well, yeah, that could happen. But honestly, guys, there's a lot of stuff that would have to happen before that does. And that stuff is not going to happen in 2 months or a year or something like that. Okay. Now, when I say that doesn't mean, oh my God, I got to give up on Bitcoin now because the dollar's not going to die. No, not at all. Bitcoin can still go up, right? I expect it to still go up. But this idea that there's all this doomsday stuff going on, everybody's like all dooms. Everybody catching on to something new every day for the reason why it's got to go on, right? But things continue to rally. So trade with the market, guys. Stop being scared to get in because you're worried that maybe it might turn around at some point. You just say you worry as it's rallying up, and you miss all these opportunities to get in and make money. Worst case scenario is maybe it reverses. Okay, fine, but now you've made more money on that 100% rally there that you can now short with. I mean, God, if you've got to be bearish, at least think of it that way. Otherwise, you miss all this. And you're miserable. And the further it goes up, the more miserable you get. I keep talking about max pain. It was like, oh no, that's not max pain. Max pain is if it keeps dropping lower. No, max pain was people expecting it to drop lower, and it keeps rallying, and they're too scared, too freaked out, too worried, too concerned that it might flip on them, that they won't get in. That's max pain. Max pain is sitting on your hands, watching price rallying when every fiber of your being is yelling at you that you need to get in. Now, none of this is me telling you that you should be jumping in right this second. You have to figure out when's a good entry, guys. And of course, for a lot of you, that's difficult, right? Because you don't have a lot of education or experience in the markets. And all I can say for that is just you have to learn. Again, guys, you sit here and you're like, oh, well, I don't need to learn or I don't need to do all this. But yet, I don't know, you want to be successful as a trader? If you want to be successful in again, I'll use football, right? You're not going to do it just learning on your own and just walk on to an NFL team, right? No. If you even think you want to go play NFL football, you're going to need professional coaches teaching you, right? You preferably would have been playing football coming up through school, into college and whatnot, right? You have professionals teaching you. You want to learn to be a concert pianist? For most people, almost everybody, it doesn't happen unless you have a good teacher, a good coach helping you along, right? Somebody that can show you how to do it correctly and help you figure out what you're doing wrong as you're doing it. See, these are the things that are out there. But a lot of new traders come in and they want to be really stingy and they don't see the benefit, right? They can't force themselves to see that benefit. So they go in and they convince themselves that they can learn how to do it just because they can get in the market. And by the way, the other side of the emotional side is that it's in our head, right? When we first get in, we're always thinking, oh man, well, I'm going to get rich tomorrow. Just because I'm in, I should be able to make money. I looked on Twitter, this guy was making this money, man. Why can't I do that? I dress better than him. And we tend to think we're better than what we are, right? We tend to play up how good we are and play down our issue areas, right? So when we look at somebody else, we compare and we go, well, shoot, that guy sounds like an idiot. And he's over making all this money. I can do it. I'm smarter than him. I've got whatever education, right? Or whatever money, right? But all these things, guys, this is all the emotional and psychological stuff that keeps you from being consistently profitable and successful as a trader. So, make sure that you're paying attention when these things are, coming across your mind. Because if you don't, life gets really difficult as a trader. Just gotta, I don't know, guys. I can't think of any other way to really say it out there. And this isn't saying, oh, you have to come to me or anything. Oh, no, you can go whoever you want. I'd love for you to come for me. I think I happen to do it a lot better than pretty much anybody else out there. And most people have been through us happen to agree, but do what you need to do with who you need to do it, but just make sure you do it. Make sure you do it. Okay. A lot of people aren't equipped to actually take themselves from a beginner to an advanced profitable trader on their own. Those that do, I did it, but I didn't even really do it. No, because I was losing the first few years, right? And then I started learning. And along the way, I picked up mentors and coaches along the way. And I think that was been the big, again, I've said it before, I think that's the big thing that contributed to it. But I guess I'm just telling you guys, it's like business, right? People get into business and then they don't spend money on advertising, they don't spend money on marketing. They're scared to they want to do it all, just like that, right? And this little kind of tiny little thing. And then they wonder why they can't get really, really successful. Does that make sense? So it's all about changing the way you think, right? So anyway, just hopefully that kind of helps you guys out a bit there with the way you're thinking when you're thinking about trading. Don't assume that just because you can do it, that you're going to be successful at it. Most people aren't on their own. They just aren't. It is what it is. 90+% of traders are out of the market within 90 days of them first getting in, guys. Lost everything. Okay. And most of it has to do with you not being humble enough to understand that you need help, with you thinking that you're going to get rich overnight, with you not understanding proper risk management, all these things that I talk about all the time. Okay. So let me kind of catch up with you guys here. I see a few of y'all have joined in here. Let me see here. Brian Riley, what's up, man? He says, hey, Chris, maybe Michael Burry gave up heavy metal. So let's go ahead and kind of pull that up here. At least I can find that. Let me see here where he is. Yeah, this is part of what we were talking about here, is that Burry, he was the guy, the subject of the movie The Big Short. I think it was Scion Management or whatever is what he had back then. So you guys may have remembered him famously selling just the one tweet, right? Just a one-word tweet said sell back in January. And so just, what was it, yesterday or whatever, he came up, he said, listen, I was wrong. Congratulations to all you dip buyers, right? It says it right here. And so, for his part, that's good. Remember, guys, what I told you about trading is being able to change your opinion when whatever basically says this has been the greatest, what do you call it? The greatest dip buying generation since the 1920s, which is interesting because the 1920s was the roaring 20s, right? That was when the stock market rallied up into 1929, and then we got hit, right? And then we had the Great Depression after that. So again, I mean, would it not be poetic 100 years later, roaring 20s again into a Great Depression here in 29? I'm not saying that's what has to happen, but this is one of those scenarios we've been kind of looking at, right? Do we just get a quick blow off top this year, which it's looking less and less like that at the moment? Or do we get something that's a more extended kind of new all-time high into a blow off top? I think either way, we have to get a blow off top. And we'll look at the Dow Jones chart again, the yearly chart here in just a bit, and I'll show you what I'm talking about on that. So yeah. I mean, a lot of kind of, man, it's crazy, right? It's crazy. Let me see here. So anyway, so Burry says, hey, listen, I was wrong. My bad. Back to buying, right? And if you get into the understanding that maybe things aren't quite as crazy as people want you to believe, hyperinflation, the death of the dollar, all this stuff, right? If you consider that maybe that doesn't happen, what does that mean? Well, that means there's a good potential that we're going to see new all-time highs across risk-off assets, right? Across legacy markets, stocks, across crypto. So yeah, I mean, I think that's definitely something to watch with that. Again, precious metals. Yeah. So if you can't understand the argument, if you are very, blinded that the only way is this crazy way, this fringe way, I mean, I can't say, it definitely can't happen. But again, the odds of it happening are so much significantly smaller than it not happening, right? Again, most of you guys haven't been in the markets for, 10, 20, 30, whatever years. So you haven't seen this. You haven't been paying attention. You haven't seen this death of the dollar thing over and over and over again. You haven't been seeing this, I'm worried about China becoming the new, having the new world reserve currency again and again and again, right? So yeah, I don't think there's anything going on now that you should go, oh my God, this is going on, so I shouldn't be buying anything, because you've been saying that since last year, since the lows last year, and it's done nothing but just continue to rally, right? Let me see here. Frank, what's going on, buddy? Good to see you. Let me see here. Mark Chenard is here. Vibaswani says, I am allergic to BS, and there is a lot of it. Might need a case a week. The dollar is going to die and reincarnate as a CBDC. Yeah. But, guys, again, nothing I say and nothing anybody else says is guaranteed. Okay? All I can do is I can tell you and go, listen, guys, here's what's happened previously. And this is what's been the result. And somebody else will go, oh yeah, but this economist over here says this is what's happened repeatedly. Well, yeah, but also you have to go beyond that. You can't just assume, okay, just because it is. And that's why I tell you again, I can't guarantee you that all this craziness won't happen, but the odds of it happening right now are so much less than not, right? And so even if they were to happen, you could still be making money right now. You could still be increasing your wealth right now until it does. But instead, you sit on the sidelines scared and just, very bearish, and you miss all the opportunity. When do you finally jump in? When you hit a new all-time high? I mean, if you're trading, then that isn't trading. That isn't trading. Trading isn't missing these multiple 100% moves and whatever. Right? So, I think a lot of it, again, a lot of people I think are fearful of getting in because, again, it's fearful, right? It's fear. Fear because they don't know what's going on, because they don't understand how to trade it properly, right? All these things that we teach every day, at Texas West Capital, how to enter, in trends, and how to set a proper stop loss, how to do a manual trade, all this, stuff that if you knew it, you could apply it and go on, and you're trading intelligently and potentially making money instead of just sitting here going, oh my God, I'm scared. And I get it, man. I get emotions. I get being scared. But if you want to make money in the market, remember, guys, markets are speculation. If you are a trader, you are what we call a speculator. That doesn't mean you're a guarantor. Okay. You don't know for sure what's going to happen, but you speculate based on the information that you have and the knowledge you have and the experience you have. Okay. And so again, that becomes a lot more difficult for somebody that is newer and doesn't really have the experience in the markets or the education on how to trade properly and proper risk management and all these things. So, again, I'm telling you this right now, guys. So that way, hopefully, if that's you, which I bet I'm willing to bet it's most of y'all, that it gets you to go, okay, well, I need to learn how to do this somehow, some way. And then that way you can get in there and make money and not worry about what all the doomsdayers and everybody else are saying. Make money along the way and deal with the situation if it actually happens, instead of missing out on everything because it might happen. And in a situation like that, which is very, very fringe, right, with a much smaller chance of actually happening, so you're not able, you're frozen, unable to make money because of something that has this very, very tiny chance of actually happening, right? Being a trader is about probabilities, guys. It's about speculating, okay? Let me see here. Oh, Matt, good to see you. Michael Otis is here. Michael says the Fed says they're selling over $1 billion of Bitcoin this year in 4 installments. Tell you what, people will be buying that up, right? Yeah. I would expect to see a lot of people buying. But here's the thing. There's a liquidity issue right now, right, with Bitcoin because of the bank stuff, right? At least in the U.S. Now, there's not really a liquidity issue outside the U.S., but the U.S., as I've been pointing out for the last few years, is a big component to, Bitcoin and other alts and other cryptos and whatnot. So there is that, but, you can still get in. I mean, I expect that if they're going to be making those kind of big sells, I think there's going to be big buying going on with that. I mean, imagine having dropped down, 80, 85% or whatever off the all-time highs, and then you've got a chance to really buy in low here with a lot of with a lot of Bitcoin, and you've got the money to do it, and you don't do it. I mean, imagine that. Be kind of crazy, right? But if they're selling it in 4 installments, it doesn't seem like they'd be selling it on the exchanges. That doesn't make a whole lot of sense. Maybe using a seller to go out there, a service to go out there and sell it across multiple exchanges. Maybe. But I think over the counter potentially be a better deal on that. But we'll see how it all goes, right? Let me see here. Just kind of catch up with you guys. Fiboswani says, what'd you say here? You said Twitter is filled with a ton of trading professionals that got lucky on the 2017 timing. Hey, I was in there in January 2017. Let me see here. Hank believes that that Wyckoff will help you more than Elliott Wave if you want to look at market structure. As somebody that does both, I don't think that's necessarily true. Again, I think Wyckoff is great for understanding, the corrections, right? So you're looking at wave 2 or wave 4 or something like that, right? But unless you're using Wyckoff with point and figure analysis, it's not really going to give you targets. Elliott Wave gives you forecasting ability, right? And Elliott Wave gives you an overall understanding of human emotion and why it's predictable. I think that, again, that's where the benefit of Elliott Wave comes in. But guys, it's not something you learn overnight. It takes a while. You have to get used to it. You have to get comfortable with it. You have to understand what's better to look at and what's not. So yeah, a lot of going on there, right? Let me see here. Silvio, what's up, man? Good to see you. Hank says, what'd you say there? In your early days, you had to open the newspaper to see the stock prices? Oh, yeah, I remember those days. And once a day, that's right. Let's see here. Michael Otis says that Ethereum USD looks like it's printing an ascending triangle. I think we might take a look at that. We're going to look at the Ethereum Bitcoin chart as well, guys, okay? Let me see here. Let me kind of catch up with you. So let's see. So, okay. We've got that. Let me see. Is there anything else? Oh, real quick here. I kind of just came across this article real quick as I was getting ready for the stream here. And so the FBI is struggling to analyze Sam Bankman-Fried's laptop because it has so much data on it, prosecutors say. Now, you scroll through this article. Apparently, prosecutors have already given 6 million pieces or pages of information to his lawyers now. Now, guys, if you ever, I know everybody complains, oh, lawyers are so expensive, blah, blah, blah. Guys, if you know, especially in a more difficult case where you have stuff like this, I mean, you've got to pay for this, you know. Lawyers, depending on your case, guys, they got to hire experts, and experts cost money. You know, they have to hire people that can go through things like this. I mean, I can't even imagine how many people the prosecutor's office has going through all this stuff, sifting through all this, you know, the FBI and the prosecutor's office, everything, sifting through all this information on his laptop just to send it over to his defense, which then has to have all their people they got to hire to get in there and go through it. It's not one person sitting at their desk, you know, with a pen scratching at it, guys. It's crazy. It's crazy. All right. So yeah, but yeah, if you go in here, let me see here. Oh, let's see here. Mark Cohen, an attorney representing Bankman-Fried, told U.S. District Judge Lewis Kaplan that he was concerned about how prosecutors would handle the contents of the laptop and may revisit the issue with the judge. That relates to a cooperating witness who may be a witness at trial. But yeah, I mean, it's just, you know, so much information. And, you know, it's not that all of it is necessarily usable, but you have to go through all of it to find the stuff that's usable, right? Absolutely crazy. So I don't think this is anywhere near, you guys can think it's going to be over anytime soon. I don't understand him at the moment. To me, it just seems really crazy. I'm not saying you should run from the popo, but man, oh man, if I'm him, and you know, and I'm if it looks like to a point that I've got a really hard chance of proving that I'm not guilty, that I've done what they're saying, right? I mean, why are you not taking off to someplace that has no extradition, right? I don't know. He just sat around playing with his playing leagues. I don't get it. So it kind of, I can't help. I mean, he's not an idiot, but maybe he thinks he's smarter than he is. I don't know. I can't imagine that there's not something else maybe going on with all this, that he's got some like ace up his sleeve or something. So I'm interested for this just to see. I know it sounds kind of conspiratorial and whatnot, and maybe it is, but it just, man, it just doesn't make a lot of sense that he just sat there instead of taking off. Like, you know, I don't know, like Do Kwon, who got caught eventually, right? Or those guys over there at Three Arrows Capital, right? I don't know. So yeah. Does he have an infinite terabyte hard drive? I don't know what he has, man. I don't know what he has. So yeah. But anyway, so crazy stuff, right? And, you know, again, guys, you've got the one thing I want to, you know, remind you guys is you've got all this bad news, right? We're hitting bad news everywhere, right? Not just in crypto, you know, where, crypto on-ramps are being closed off in the U.S. and SEC is going after everybody and their grandmother. And, you know, you get all that, right? And CBDCs coming out. And then you look at the broader economy and things are going on, right? And so now you've got the macroeconomic stuff. Oh, the banks are all dying off. We've got a rolling systemic banking credit crisis going on now. Dollar's going to die. China's going to take the lead, going to become the world, you know, is going to have the world's reserve currency. I mean, but yet what's going on? The markets continue to go up. So, you know, generally what that tends to tell you is that retail, for the most part, is out. They don't have those short-term hands that are going to, you know, have all that fear of pushing it back down. And the bigger players are in soaking it up, right? They're in it, pushing it up. And so, I mean, you know, these are kind of things we look at when there's bottoms, right? I mean, everybody say, bear market, but I mean, we'll look at the charts here in a minute. How far are we off from the all-time high, in stocks, right? They're saying bear market in stocks. Big, huge thing going to happen. But how far are we down from the all-time highs? And it's been over a year, right? So, I mean, just some things to think about, guys. Just some things. You can't just sit there and just jump on all the fear mongering and everything that's going on at the moment. Okay? Christopher H., what's up? You're saying you're saying that what's his face? Sam there was using the power of positive thinking. Yeah, probably. Kimasabi, what's going on, man? What's going on? By the way, guys, I told you if you're jumping on that bundle, Fiboswani is going to do a master course on fibs, on fib trading, and he says there is a lot in the world of fibs beyond the surface. I agree. All right, guys. So let me get the. Let me see here. Let me get the other. Oh, let me see here. Let me get my charts up here now. By the way, I've been having a crazy time this week. All of a sudden, my browser is just spinning when it's trying to load up TradingView charts. So I've actually had to download their desktop app, which works a lot better now than it did when it first came out. I'll have to tell you that. Let me see if I can find it here real quick. Man, oh man, where is it at? Oh, well, I think that's it right there. Yeah, that's it. And then we'll go ahead and start with that chart there. Can put it on here for you guys. There we go. All right. You kind of get it back out. You can see it a little bit better. Widen it up there for you. So if we're talking about Ethereum, Bitcoin, right? So we talked about this not too long ago. Well, I mean, maybe a few months ago. And I had two targets here, right? I have the 0.06225,383 and then 0.06065,548. It hit the first target right here. It's bounced. It's hitting the resistance right above it, right? This is the weekly chart. Watching this here, I don't know. I think we may head down a little bit further there, hit that 61.8 retracement. But if we can see some continuation, I mean, from the weekly, what we want to see is a breakout above that weekly pivot up there, about 0.07013,902 kind of area, okay? So that's what I want to see. Let me see. Maybe if I wasn't competing tab for the data point with Sam, my browser could make it. Right? By the way, yeah, my Discord isn't working either. The Discord app keeps dying on me. So I'm like, I have to access it through my browser. It's just been a crazy week, guys. Honestly, I can't wait for tomorrow. I need a break. But really, I mean, that's where we need to get about. And if we can, again, coming off of this, if we were to rally from where we are now, that gives us a wave 3 target up here at around 0.121454. All right. Minimum expected wave 3. If we're to drop down a little bit to that next target there at the 61.8, then we'd be looking closer to 0.11981010. So again, my thought is that we do come on back down here a little bit more. And if we do, of course, that gives Bitcoin a chance to rally up further first, right? And you remember my big idea here is that maybe we get this rally with Bitcoin up to that mid 40s level, right? If we can pop out impulsively above this 30,000 kind of resistance we're at right now, 29, I think there's a good chance we rally into that mid 40s, upper 40s even. And of course, doing that, then that pullback then allows the alts to really kind of take off. So, that's more or less just like this big kind of grand kind of outline of what I think could happen if we can get that impulsive breakout in Bitcoin above that 29, 30,000 area. Again, would send this one up high here. We've got this great range, guys. Remember, this range has been in progress here on Ethereum Bitcoin since May of 21, right? So we're almost 2 years in the making here, guys. That's a lot of consolidation before continuing, right? Chris and Fibo now come on as a bundle. Yeah, I restart my computer every day, Data. It's not helping, unfortunately, right? Kimasabi, the bundle is, let me see here. I'm going to pop this up here. So it's this link right here. So I've got a Pivots Point Master Course pre-sale going on right now, where you can get it for $49, or there's an option to grab the Master Course bundle, which comes with 12. They'll be released every month on the 15th for the next 12 months, starting this month with the Pivots Points. And then you'll also have 2 other courses released during that time, a Fibonacci Master Course by Mr. Fiboswani there, and then a Hurst Cycles Master Course from me. Plus, with the bundle comes a month of Tier 3 access. So, yeah, you know, for those that are interested, man, it could be a great deal on that there. But anyway, so this is what I'm kind of looking at. And so if we do get this drop down further, whether it's here or even further down, I mean, you know, we're going to look at the 61.8, but further down below that gives us the 70.5 here at 0.05758,786. Okay. So those would be the 2 targets I'd look if we continue to pull back here. And hitting even just one of those, I think, would be because Bitcoin takes off. And it flies up there above that 30,000 and just kind of really takes off. So if we look here at the actual Bitcoin chart, right? Let me kind of zoom out here a little bit. Actually, you know what? Let me make a copy here. So I'm not drawing on this chart that that our members are using. All right. Because sometimes I get crazy on here and draw, right? Okay, here we go. Here's what we're looking at, guys. I mean, this is Bitcoin, right? This is Bitcoin. No, Mark, these are separate. They aren't part of anything else we do in TWC. Okay? Yeah, it's something completely different. Something, again, all these are master courses. They all go hours long, you know, into great detail about whatever it is we're talking about, you know, for that particular course, how to use it by itself, how to use it with other indicators, the things to watch out for, the best ways to use all that kind of stuff. So yeah, give you a really in-depth understanding. But here we go, guys. Here's the weekly here, right? Now, I'm not a big fan of this being a head and shoulders here. So you get your left shoulder, head, or even double head here, right? Dip, and then right shoulder here, because the right shoulder is so far off of the left shoulder, right? Or it could be a double left shoulder even. But I think it would be just, if I was to draw this, I'd go left shoulder, head, right shoulder. But we do have a expansive rally here, impulsive rally to break out, large candle spread. And we remain above that neckline, which would be right here, right? So if you think that's what it is, guess what, guys? As far as a target goes, let's see if I can do this here. Let me see. Because I want to get this clean here for you so you can just concentrate on what I'm talking about here. Let me put all that together. Close it out. Let's see if that works. All right. Yeah, there we go. Great. All right. So if that's the case, right? So if you've got what you believe is a inverted head and shoulders here, right? It would look like this. Right? Now, again, this is why I'm not a big fan of it. The shoulders, it's just really off. This looks really large compared to this. But again, this breakout here is clean. It's good. As long as you're staying above this, you can go, okay, sure, that's what I have. And so then you're going to get a pattern target here of, where does that get us? Right up here around almost 41,200. Now, if we get that, right, guess what? That takes us to kind of that area I'm looking for, right? Pattern targets are often around wave 3s. See, people don't tell you this stuff, guys. This is what I'm trying to tell you. These things that I've learned over the years are what I'm trying to help you guys understand, because they help you structure. They help you with structure and what to expect, right? But if you use it another way, usually this will, you know, it won't be exactly on a wave 3, but it'll usually be around the wave 3 target. Okay? And so again, we're looking for 5 waves up, potentially mid 40s, upper 40s. This would take us there, right? Why would it go there? Because if we can break out through this level, again, we're finding resistance right here, right? So you have the resistance right there and support right over here. Again, support again there in June of 21. Support again right here in May of 22. And resistance right here where we're at. So if we can take that out with an impulsive move up, again, we have inefficiency here taking us up to the R1 pivot, which sits right above 38,000. And spike up there a bit, right? So you end up getting, if you're looking at this off the swing low there, if you look at this as a 1, 2, right? So this area around the R1 pivot gives you an overextended wave 3. It pushes, and of course it could pop up even further, right? We can see it even pop up here to 45,494. But this wave 3 gets you around where you would expect it to kind of get you to for that third wave on that. So, again, what we're looking at, and what it does even more is, let's say we're getting up here toward this next kind of resistance area, right? Let's say we're getting up here around that mid-40s, 46, 660 kind of area. If we're pulling back, so that gets you a wave 1, right? Off the bottom here, 1, 2, 3, 4, 5. I don't know why this is coming out white. Give me a minute here, change that. Well, all of a sudden, look where your 50% is bringing you to. That area we're looking to break out of, that resistance support area. So if you're doing this, you're going, okay, well, we got 1, 2, potentially, 3, and your 4 is going to be right about the same area. And then you're going to get a 5 up here. And then it'll give you, whatever it's going to be here, maybe a 1, 2, 3. But that gets you there before it heads up in wave 3 again. But what it does is this congestion right here. You pop out through it, you come back, retest this support, you rally up higher, finish out wave 1, you come back wave 2. Again, wave 2 pulls you back toward wave 4, the lesser degree, which is generally where we look for it to do, first target. And that's a 50% retracement, and you head up higher. So, yeah. Have fun, Fibbo. Again, this doesn't have to happen. What I'm saying is if we get this pop up through this area, this is the scenario I'm watching. Maybe not exactly these levels, but I'm looking for wave 3 to target the R1 pivot area, wave 4 to pull back to this congestion, wave 5 to rally up into the mid to upper 40s. And that gives us 1, wave 2 pulls back then again to this congestion here. And everybody that's sitting right here waiting for 25,000 gets left. You see, because now price isn't going to go down this way, right? Price takes off without them. And here's the problem. If it comes back here, they're going to get scared and they're going to think, oh my God, it's going to come down lower, so I'm not going to buy here. They expect it to then come on down, right? But instead, takes off upward, right? Leaves them again. Left them again down here, right? Left them over here. Every time it pulled back, they thought that was the thing. They were always waiting for it to come lower, right? There's recency bias. After this big move down. So, yeah, I think that's setting up there for it. And we'll see what happens on there, okay? How do you define consolidation? Is consolidation done based on closing above or below the price range of consolidation? No, so consolidation is just basically just sideways price action, right? You may have some dips above and below, but what you're looking for, the way that I usually talk about it is visually, right? So it's just the place where you have most of the price action happening. And often that's going to show up if you have VPVR on over here, your volume by price level, it'll show up in that area, right? So if we look here, you see this right here? So I just drew this box on real quick, but really the consolidation is kind of this, kind of just this area right here. See that right there? Just about like that. That's really the consolidation. That's what you're interested in. Because when you have the VPVR on here, it shows you this. And it says, okay, so this is the area where the market is most interested in. It's not bearish. It's not bullish. This is just the area where the market is most interested, where the most, in this case, the most buying and selling of Bitcoin have happened at this level. And so what it means is if you're above it, it provides support because the market is interested in buying there if you're above it. If you're below it, you find resistance. The market's interested in selling there. It's not that they're bearish or bullish at this area. It's just that this is where the market is most interested. This is a price level. And so if you can get out above it, they're going to consider it broken. And if they get a chance to buy it on the way down, they're going to buy, giving you the rallies, right? But until you get above it, if you're coming from below, they're going to try to sell into you because, again, this was where, you can think of this as a supply cluster because it continued down afterward. So you come up here and you have people that were here that are going to try and defend and sell more. And you have people who missed this opportunity who are going to try and sell more here. So your shorts start building up. And how do you get a pop above this? Your shorts start building up and you just pop up and you start running through them quick and you liquidate them, right? And that gets you above this area. Now that you're above this area, people don't start selling all of a sudden. When you come back to it, now you're above it. So they're going to be interested in buying at that level now because you've broken through it. Okay? Does that make sense? So that's kind of what we look for with this. But I mean, yeah, there we are, guys. Long story short at the moment here, guys, we broke out above the weekly pivot on large volume, large candle spread, large spike of volume. And all we've done is retested it as support so far, last 2 weeks right now. Okay. You say, oh, but there's a doji at the top of that rally. Well, yeah, so. But a doji is a reversal at the top or bottoms of rallies. No, it's a potential reversal. It's a pause. You have to have follow through. Guys, I've said this before. I'll say it again. There are no reversal candles. There is not a candle that you can put up there that every single time it happens, it's going to reverse. You have to have follow through in the next day or the next period or the next few periods. If you're not getting that, it's just a pause. It's just a consolidation where you're getting more buyers in, where you're fatiguing any sellers that might be there, right? Again, we talked about this one when it happened over here on the week of December 12th of last year. We said that's a pretty negative candle. Usually that candle will suggest that you're going to print a new low. I said, but if it doesn't, if all you do is pull back a little bit and you start rallying back up, if you break out above that, it's going to be it becomes very bullish because it didn't have follow through. And that's exactly what happened here. And this did exactly what I told you guys it was going to do when it rallied up to where we were expecting to rally, right? So again, it doesn't guarantee reversals, right? Like here's a doji. Okay, there's a reversal there, right? And so it does happen, but not every time. Again, here it continued up, right? Here you got a huge pullback, didn't make a new low yet. Here, barely pulled back, went up higher, right? So I mean, again, guys, don't buy the nonsense that a candle is a reversal candle. They all need to be confirmed with follow through. Okay. And if you don't get that follow through, it's going to go higher. You don't just sit there and wait. And eventually it comes down. Most of the time, if it doesn't follow through within the first few periods, it's going to revert, to the direction of that trend. So here we are, 2 periods. Well, we're the second period here beyond the first period beyond the doji, right? And here we are we dipped down a little bit below it, but now we're back above it here. I mean, so yeah, nothing here is suggesting it wants to go down yet. Again, that doesn't mean it can't, but the longer it kind of sits there in this thing, potentially the more likely you're going to have a strong breakout higher, especially when it's at these areas of resistance like this. Let's see here. Yeah, wait for the confirmation of the trend reversal, or you will get chopped up, says Deadly. Yeah, exactly. It's not as, there's a lot more nuance to these things that when you first come into trading that you accept as, definitives, that people treat as definitives. Again, reversal candles, stuff like that, right? If you've ever gone through any of my lessons with Wyckoff, you'll understand that, right? We always talk about volume as nuance. The general trader out there that doesn't understand it will go out there and go, oh, well, look at all this volume in this big candle. It's going down further. And I look at this and go, well, no, to me, I think there's a good chance this might end up going up here, especially when we see the next candle, right? This looks like it's going to hold. And sure enough, it does, right? But we do it for reasons of volume and price action analysis, which are much more nuanced, right? But the average person getting in there will just go, or they'll see this right here, right? And they'll go, well, where's the volume? The volume's dropping off. And then they'll go, oh, yeah, look at that reversal candle, right? But they don't understand what's going on. They just look at the volume in a very limited, very generic way, right? Candles are the same things, guys, okay? I'm not saying don't pay attention when these, what people talk about are reversal candles happen, but you have to understand the full thing. You can't just immediately assume that you're going to get a reversal on that, all right? Let me see here. Volume scares you, I'm at where? Where does volume scare you, buddy? Right here? No, volume doesn't scare me here. As a matter of fact, if I'm looking at this, again, you had, when we look here, you had this big volume and this what would potentially be a reverse candle, but absolutely no follow through. It dipped just right to support here and rallied back up, ripped up on higher volume, right? We got to the top there, kind of pulled back, popped up one more time, pulled back, printed this beautiful doji reversal pin bar candle here, right? And this came right at support, guys. I don't know if you know, but I've talked about this. I think I did on Twitter anyway. Pay attention to where the hell, got all this other stuff on here now. But it hit this level right here, right? You see where we're going here? So it hits this level, this resistance support level, prints a pin bar. There's no reason you should not have gone long when this thing closed. Should have absolutely gone long. This is what we call a higher confidence trade. You're printing a pin bar with a huge lower demand wick here at strong support. No reason you shouldn't have gone long on that, right? Oh, you mentioned your previous one there. Let me see here. Binance is the highest volume in all the exchanges. That's why I'm tracking the volume from Binance, although there seems to be a multiple 1-2 setups in lower time frames. The massive decrease in the volume scares me. What's your opinion, Chris? Oh, yeah. Well, you're going to get, volume is going to kind of level off, right? So if we look at this, as you get into resistance here, right? And you've had this rally up, volume's going to kind of come off here a bit, right? But that doesn't mean you're not going to get a spike of volume to carry you above that. Again, just looking at volume and assuming, price is rallying higher and volume's decreasing, so it has to fall, it doesn't happen that way, right? Again, look at this right here. See this rally up here? As volume continued to fall off, we get to the area here. Look what happened. Big spike of volume as we popped out above it. We went sideways here, kind of, slightly higher highs, higher lows, right? But really just sideways overall. And then you see volume kind of just around the same area, kind of dropping off there before it. And then boom, picks up in volume as it pops through this area, right? So, those are the same kind of things when you look at where we currently are, right? So, yeah. Let me see here. So hopefully that makes sense there. So yeah, I think that's that's again where I'm kind of looking at with that. Now, if we jump over here to the dollar, man, the dollar just kind of a pain in the rear end, but it kind of bleeding down a bit here, right? And then we've got this bit of this rally. Again, usually when you get a wave down to the previous area of, either of the previous swing high or, if you're coming down, you hit the previous swing low, that usually indicates a subwave, right? So if I was to look at this, I might be thinking, okay, 1, 2, 3, 4, 5, because we almost, we're right down here in this low. And so if that's 5, again, you're looking this area here, that's a 50%. So maybe this is A, B, C up to that 50%, and then you fall down lower. And so, again, if that's the case right there, potentially getting down here around 100, right? So our minimum wave 5 of 1 target is right here around 100.993, but potentially could see it getting down 100. Now, why does that make sense? It makes sense because 100 is a psychological round zeros number, right? So look at this. Normally, we're going to expect support there, or if it's above us, resistance. But also, that finishes 5 waves down, right? And where do 5 waves down get off this swing high? To the previous swing low. So again, I could see that continuing down here or just beyond it here, right? Down here. So I could see it getting to this area, finishing 1, 2, 3, 4, 5, then rallying back up here to wave 4, back up here about 103.3, somewhere right around there, 103.25. So you get a 1, you get a 2, and you break down for 3 of 1, 2, 3, right? So that's what I'm kind of looking at there as this continues to play out here. Let me see. There we go. So yeah, I mean, further downside for the dollar. Not surprising, right? Let me see here. So that's what we got with that. Let me think here. We're going to talk about, I wanted to show you the Dow Jones chart here, right? Okay. So I've shown this a few times, so we'll talk about it again here. First of all, a quick reminder about divergences. I see a lot of people saying, oh, but look, there's a bearish divergence. No, there isn't. There's a bearish divergence. This is a bearish divergence from the swing high to the swing high, okay? We broke down. Guess what? Now we have a high and a higher high. We have a high and a higher high, guys. This is not a bearish divergence, and thinking it is what's going to lose you money. You guys have to be careful with that stuff, okay? You can't skip over these important areas within. This is a big rally up. It took you to a higher high here. Why are you not saying that's the divergence right there? That's a bearish divergence, which led to the move down. But now we're back up, and we've got now higher highs. So there is no bearish divergence on the yearly here for the Dow Jones, right? But here's what you usually see when you've got a strong rally going for a while, and you get a blow off top, right? You'll usually see these large candles coming in before you get the large candles coming down, right? We don't really have that here, right? We don't really have this. So does that mean we have, 2 more years, maybe 3 more years before, bigger candles like this to kind of get more sideways before you? That's what I'm talking about. It's visible here, right? And so I think we're still kind of potentially working on that. This was last year's candle. Last year's candle was a hammer candle here at the top. Now, that doesn't really mean there's bullish or anything here. We had it right over here in 2000, in January. Yeah, in 2000, right? 1999 was this big candle up, big-ish candle up. And then we had a hammer candle pointing there on the next year. And then it kind of came down, right? Really kind of strained movement down. Picked up. So you had a doji, almost a doji coming in there. And then you have, your candle at the bottom there in 2002. Then it rallies up into the great financial crisis in 2007. It peaks out. 2008 is the bad year. 2009 gets us the low. And then boom, almost a hammer type candle printing there to rally back up. So, I mean, just because we have that doesn't mean it can't go down lower. That's why I'm showing it there. But, again, if we're looking at super cycles, right? This was the last one here. The next one should be coming up, and we should see something similar, but maybe more sideways, right? But you're still expecting a bit of a blow off top. So we'll see what we get. Right? Let's see here. If we zoom in a bit here, excuse me, look at the monthlies. Excuse me. Again, you have 1, 2, 3, 4, 5 gives us A, gives us B, gives us C. Remember, the Dow is the one that's broken out above the swing high, right? Technically, guys, a bear market is a 20% decline. Okay, from when you're thinking it from an all-time high, right? A bull market is a 20% rally off that low. Now, obviously, we have more than 20% here, right? But nobody wants to talk about the Dow because everybody's talking about tech, right? I mean, we got we got 20% rally there, as a matter of fact, into November of last year. And we broke out above that mid-August swing high, right? Oh, wait, no, I've got it up here already. But look at the NASDAQ. You got the NASDAQ 100 here, right? Everybody's excited because it has now rallied 25%. Having a pretty good week right now, right? And so, again, bull market for the NASDAQ 100 there, right? Tech stocks, let's go. Still haven't broken out above the mid-August swing high, though, right? So still looking to do that. But again, the idea that maybe we have an A, B, C going on here. And then, four wave, for this area here, you have this descending resistance right here. And as you can see, not only do we have that descending resistance, we broke out large candles, rejected the pivot, makes sense, okay, previous resistance, pulls back and retests that resistance as support, and now we've broken out above here. So again, coming off here, we should be expecting a rally at least up to the R1 pivot, right? What happens when you get up there? 50% pullback to the pivot. You see that? Yeah, Andrew Bennett. Yeah, maybe a second weekly close above the pivot on the NDX. Yeah, it looks like we're going to get it. This is a nice candle. We've broken above resistance. We've got a gap here. We've got a gap up here. For those of you that are all into gaps, right? It's just a weekend gap though there, and it's just a weekend gap here. So I'm not too excited about them, but whatever. If you are, you are. There you go. There's your reasons for thinking it has to go up further, right? But I like that you've got this descending resistance. Whether you look at this as a wedge or not, that's not an issue. What I like is you've got this time period of this descending resistance, right? So from 301 days, almost a year, right? And so you hit it, you came up, nearly hit it, pulled back, and then you broke out, and then you came back and retested its support, printed an outside bar. Remember when I talked about that a few weeks back? I think I posted on Twitter. Outside bar here, it's rallied up. So yeah, I mean, again, for me, I want to see a breakout above 13,720.91, but I mean, it's looking pretty good to me so far. Ahmed says Tesla's looking decent. Yeah, a lot of them are. Tesla, Meta, stuff like that. Again, these tech stocks, right? So yeah. Again, just watching it play out here, I think there's a lot more positive right now, potential setting up than negative with the markets, right? Here we go again. We are currently sitting just at 21.9% decline off the November 21 all-time high. So 490 days we've supposedly been in this going to crash forever kind of thing, right? And yet we're only 21.9% down. So, just some things we look at. Again, doesn't guarantee anything, but if we do go down, guys, if we do go down further, I want to say it'll be huge, but I can't get over the fact that this is an ABC here. Right? I mean, 1, 2, 3, 4, 5. So you can't even say like this is a flat, right? You're not even going to go ABC, ABC, and then 1, 2, 3, 4, 5, because this is 1, 2, 3, 4, 5 here, or at least it appears to be, right? So if we did come down further, I want to say something like a W, X, and then a Y, and then I'm looking right here at the S1 pivot, around 87.50 or so, if we were to get that. Okay. So kind of what we're looking at here again, and this is not just the NASDAQ. I mean, this is what I'm looking at, again, for all of the stock indexes. Again, the Dow is the first one to break out. It broke it out a few months back. So if we can get confirmation with the NASDAQ, and or the S&P or something, following through as well, then there we go. Let me see here. Can you look at the RSI downtrend in the daily for Bitcoin? In my opinion, if it breaks up, wave 3 possibility will dramatically increase. All right, let me see here. I'll pull my chart. You said daily? All right. RSI here. And what are you asking? The RSI downtrend in the daily for Bitcoin. Well, this was the downtrend here, right? So I'm not sure what you're looking for here. This is the downtrend. And so it's rallied back up. If it breaks up way through, possibly will be dramatically increased. Yeah, I mean, I think it's already there. Oh, starting from the 17th of March. Oh, right here. Yeah, I mean, again, that would be, well, you see here. Oh, I don't have that on there. Again, it's going to depend on how you're looking at this. Let me see. Oh, I got all that other stuff on there. Oh my gosh. Yeah, but I mean, I've got it as a 1-2, 1-2 kind of thing. So let me show you here real quick. Turn that off. So I've got this as a 1-2 and then a 1-2 here. So for me, if I'm thinking about it, the 30,000 is this level that's been holding us back for a couple of weeks. A lot of supply in there, right? Potentially. And so if we break out, it should rally impulsively, strongly, right? I mean, we're talking something like this, is what I would be looking for. And so if it is, that means it would likely be a third of a third, not just a third way, but you got a 1-2, 1-2 kind of thing going in. And that gives you the overextension on the 1, 2, 3. So yeah. Let me see. So I mean that's what I would look at. I know some people have this as a 1-2. I think they have it. I think they're trying to do like a wedge here. The one thing I don't like about that though is your wave 4 isn't pulling back over here into your wave 1, right? And so usually you want to see that if you've got a wedge, leading diagonal or an ending diagonal. That's usually what you want to see, and we don't have that. You can see that they all stop prior to it. So again, I think this is potentially a leading diagonal here, maybe, right? So 1-2 and then leading diagonal 1-2 here. And we're heading out. Okay. So yeah. But you can watch your SMA here on the RSI if you get a breakout there. I mean, usually indicative of a good buy signal, but we're sitting at resistance, so not as good as if you were looking for a bullish cross coming out of oversold or something, right? And you got it right here. A nice move up. Right here, you got a nice move down. But, again, over here, kind of went here. And, it rallied back up even higher. It hit it, got rejected. So, yeah. Kimasabi says, I've got markets going up into May, then either reverse or pull back, kind of leaning big down, but we will see price action from there. Yeah, seasonality, again, April and May coming up, usually bullish, not just for Bitcoin. They say sell in May and go away, right? So, yeah, potentially got that going up there. Q2 setting up to be green, Andrew Bennett says. His stocks, his crypto, and his lawn in California. Hey there, Ben Huevos. What's up, man? Let's see. I would like to hear your thoughts on the USD peso, or on the USD against the Mexican peso, right? Okay, so let me see here. We looked at that chart before, didn't we? Let me see here. Oh, I got to get used to this. Still not used to the new style here. This is the weekly. We can jump out here at the weekly and see how this looks. Oh, wait, I had a newer chart here, 3-month. All right. So now we have this continuing to decline here. And so this is the 3-month chart, guys, okay? So it's continued the decline over the last 3 months there into again, this would be March, right? So January, February, March is this latest candle. And so now if we're looking at this, I mean, this looks like, again, for me, I'm thinking that we've probably topped out there as a wave one if we're coming off the bottom here, right? So you get a 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4, 1, 2, 3, 5 gives us 2 here on that pullback. There we go. And 5 up there for 1, and then 2, and then 3. Again, big, big candlesticks going up there. There's a 3. There's a 4 as a triangle. And then gives us 5 into the top here of 3. And again, you've got some big candles. Triangle again for 4 potentially, and then 5 with this last thrust up here. So, if the count's correct, then breaking down below wave 4 completes this wave 5 here, right? 5 of 1. So we can't, continue to move up there. Here on the 3-month, we've got a lot further to fall. Let me see here. Zoom in a little bit here to the monthly. Monthly hasn't quite hit the support there for the RSI. Which was, as you can see here, is right here at the ascending channel support. On the monthly, so the monthly pivots, monthly weekly pivots are basically the same. We've dropped on down through the S1 here. We're halfway to the S2, which you can see is nearing that 38.2 retracement. So if I'm using fibs, I want to see a breakdown below 38.2. Otherwise, again, the fact that we're dipping down below the S1 leans to the side of bearishness, which would keep it in line with what we're looking at already here. If we zoom into the weekly, you'll see that the weekly Stochk RSI is almost hit overbought. We had this rally into rejection at this previous area of resistance, support is resistance. We've had these 2 big weekly candles down nearing this here. Again, I would look for further breakdown on that. Matter of fact, if I'm looking at this weekly and we get a breakdown without looking at anything else, let me see here. I think 1706 would probably be a pretty good target. If we can get some further breakdown on this to continue down there, right? Usually the expectation would be a breakdown below, a retest of the channel supporters resistance, and then continuation lower. Daily, again, drop to the S1 pivot, which was good. Got a nice bullish engulfing candle out of it. That was good, but got rejected here at the R1 on the daily, right? This previous swing high. Look at all these wicks. That's a lot of selling going in there, right? And look what happened right here. Look at this. Look at this huge bit of supply, or this huge bit of supply coming in, right? And they take out the demand. Demand showed up. I mean, that's why you have all this volume here. But we ended up lower. So what does that tell us? That tells us there was more supply than demand coming in there. And it's a significant level. It's a significant spike over what the average was here. So there was a lot of selling going in there. The expectation would be further down, right? So now I'm looking at, okay, well, if we're coming back up, see here. I don't know. I think we might get a little bit lower here. We might actually continue down here into the support here. But man, I'm interested in this candle now. With all this volume coming in here, my first thought is I want to see if it's rallying up here. Do we get a rejection in that candle? Because the expectation would be that we would. Again, due to how much volume came in right at that part there. It's a small candle, but ultimately we continued lower. There's follow through. We didn't get stopped and continue up, right? So if we pop up to there, the expectation should be that we get rejected in that area. Right around the 18.238 to 18.3436 kind of area. Right? So yeah. So So there we go. I got to get out of here in a minute. Elijah, what's going on? Please look at Sol USDT. It bounced off the weekly support. Yeah, it bounced off the weekly support. Exactly. Yeah. So, I mean, I'm still bullish on it. Let me see here. I mean, overall bullish on it, the idea that it should ultimately continue higher, right? Okay. So we got rejected at the daily, came back, found support at the previous area resistance. Now we're trying to bounce up and go more. Importantly, bounce off the weekly support, you're saying. Yeah. So weekly, again, we kind of just look at this. See this resistance all the way over here, support over here, and we found a support printed a hammer candle there, a pin bar. Yeah, I mean, I think we probably should head up higher there. Let me kind of zoom out a little bit more on this. Stoke RSI is high. Yes, it's overbought. But again, I want to keep showing you guys it can remain there for a while, right? Let me show you here. Look what happened back here in January of 21, right? We hit overbought. We kind of did this sideways thing here. And then it stayed overbought as it rallied up. How high did it rally up there? It stayed overbought. We'll just go from right here where it broke out, right? That kind of area. Rallied up almost 1,500% while Stoke RSI stayed overbought. Okay, guys? So I think that's the important takeaway from that, right? And so again, looking at this pullback, that's a good place to find support. You can see it's right here. It's kind of right above this higher volume cliff node kind of area here. Let's see. Yeah, see right there on this rally up through from the, the weekly, from the week of December 26th of 22 to the week of January 23rd of 23. Notice that red line, that's your point of control. That is in this rally here. That is the level, that's the price level where most of the price action took place. That was where the market was most interested. No surprise that that's where you got the bounce. As I told you guys, with these nodes, again, even if you look at session volume, if you're above that point of control or above that high, or above the high volume node, it should act as support. If you're below, it should act as resistance, right? So Hank says the risk with Sol is that it has been used as collateral for a lot of loans and it may be coming to the market in big chunks. At best, that will act as a break. So again, this is the idea. This is why I tell my students not to worry about the macro narratives. Because, I mean, what Hank's saying is true. It may, but it's just a guess, right? It's just a guess. It may not. And if it does, it may not until much later, right? There's too many guesses, too many maybes going on when you're doing, that kind of analysis that especially for newer traders, it's going to keep you scared and sidelined, right? So that's why I always teach new traders, man, don't worry about the narrative. Stop worrying. I've talked about it a lot lately, last few months, because there's so much macroeconomic going on, right? And so many people out there swearing that this and this has to happen. And yet, had you not listened to them and you just watched the charts and you got in, you would be making money instead of sitting on the sideline scared, right? And that's the thing. That's why it can be so bad when you don't really know what you're doing or you don't really understand the macroeconomics, and then people are out there shouting, this is what's going to happen. It's easy to get scared and not get in, and then you miss rallies. You miss money that you can make. Yeah. So, again, it's opinion, Hank. Again, you don't know if it's going to, or how much of it is going to, or when it's going to come in. So again, if you're trying to sit there and go, okay, well, here's the problem is that it may, well, it's not really helping you out. It doesn't really give you any information, right? That's what I'm trying to get across. It paralyzes new traders because they're not going to act. right? They're not going to act. They're not going to act when things like this happen. For them to get in there and rally. I mean, it was, again, I was here on that Wendy O show here, the 30th of December or whatever. And, I talked about buying right here at, 9 and some change. Instead, it looked like a good buy to me. I said, if we get 15, we'll probably hit 30. So far, we've gotten up to $27.12. That was pretty good back here, but people scared, right? Nobody getting in on that. Everybody mocked me, right? Yeah, they did. Her watchers aren't very nice to me anyway. But there it was, right? And so, and here we are with another chance to potentially rally it up there again. So, yeah. So, we'll see what goes on with it here. Again, for me, it looks like a 1-2 on that. You can see here that the pullback right there, almost 61.8, golden pocket, right? So I'm looking for a breakout above, let me see here. Right here, 27.12, 27.12. This swing high, because I look at A, B, C. So a breakout above 27.12 should set it, should give it confidence. And that gives us a minimum expected wave 3 of 46.86. Oh, by the way, guys, I did change my target, I believe, to 50 or 55. You'll have to check my Twitter for that a few weeks back, from 30 to that. And a wave 2 minimum expected target up here about $54, which kind of gets us to this area perfectly, right into that supply structure right here. It's the wrong one. Needed to be black. There we go. See how that wave 2 lines up perfectly with it? It's all that supply sitting right here in this wick. So, yeah, I think it looks pretty good. Okay? So, it is 12:30 now, guys, so I've got to go. As always, remember that the only thing you control in the market is how much you lose. So, please keep working on that more than you do anything else, guys, okay? But if you're interested in getting a better understanding of market structure and whatnot in an easier, digestible way, Wyckoff takes a lot longer than pivot points to learn. You should definitely learn Wyckoff. But pivot points are amazing. And right now we're doing a pre-sale, $49, guys, or we have a bundle in there that's going to get you 12, 13, 14 master courses over the next year, plus a month of tier 3 access, which is normally $199 as it is. Where, of course, we teach Wyckoff and Elliott Wave and price action every week, live streams for our tier 3 people, a whole bunch of other stuff. Jump in there, do it. If you got questions, jump on our server, guys. Send me a DM, send me an email at christopher.inks@texaswestcapital.com, or even, heck, contact at texaswestcapital.com. And I will get back to you and answer any of your questions you might have, okay? So that's it. I hope you guys are trading safe out there. I hope that you're kind of really not paying a whole lot of attention to the bigger concept, macroeconomic. Oh my God, the sky's falling. Remember, guys, everybody's been calling for a recession it's just about a year now. And what's happened? We've been rallying since last year, right? Not the entire time, obviously, not the whole year. But again, we haven't done that. We haven't got the big drops that they've been talking about. Instead, we're getting rallies. So, again, I'm not saying that it can't happen. I'm just saying that if you sit there and you worry about these big macroeconomic things that even if they happen could take a lot longer before they finally do, you're going to miss a ton of opportunities to make money trading. And that's what we talk about here. We're talking about trading, right? So I hope that works well. Don't forget to follow Hank out there, guys. Fibaswani, of course. Hank's, again, he's got some pretty good charts. Oh, okay, I'll give him that. But, I like the images. I like the digital art. That's pretty cool with the AI. So there it is. Let me see. Anything else I need to tell you guys? No, I just hope you have an amazing weekend, all right? So you guys trade safe out there. If you're in the mentor program, I'll see you guys in about an hour for our weekly session. If you are in the rest of Discord, of course, I'll see you guys over there in a bit as well, all right? You guys have an amazing weekend. Take care. I'll be back Tuesday, 11 a.m. Central Standard Time. Join on in, okay? Take care.